Perfect. Right, guys. Welcome, welcome. It is Thursday, the 4th of June. And yeah, we are back. We're back live, which is what we like. So just move this down. Hold on a minute. I have to leave it there. Fine, fine. Right. So first things first, I'm going to go back to basics a bit because obviously we haven't done one of these since Friday. We got a few new members as well, so obviously they haven't had the luxury of coming on a live. So first things first, like always, say with the news, you don't have to understand it fully. You just have to be aware of it. So. We've obviously had trade balance. Okay, not really that important. And then obviously a speaker as well, also not so important. The only important news that I can see today will be at 1:30. I'm not even worried about pound here. So the only important news will be jobless claims. So jobs data, and bear in mind, I'm going to have a bit of a day today, properly catching up. But yeah, it's due to come in there or thereabouts. And then we want to be looking at continuing jobless claims here as well. Now, we do have quite a busy week tomorrow. We have got, should have, yeah, there we go. Um, Normally we have non-farm payroll. Yes, we do there. So yeah, non-farm payroll, pretty hectic day. I'm going to be monitoring GDP. It's supposed to obviously drop down a bit for euro, but I'm not that worried about it. But this one should be a big one. Why should it be a big one? Because to me, dollar is in a very tricky spot. All right. Very, very, very tricky spot. It's been trending, lovely this week. If you think market opened Monday here, or Sunday here had a little dive down, but it's had this big pump up and then a continuation of pump up. Lots of it due to, and this is one thing that I do need to catch up on. There was obviously news coming out, even though it was kind of rejected by Iran. That obviously, yeah, there was an agreement coming into place. Then obviously they said that they didn't know anything about it, but by the looks of things, market has gone with that. An agreement either is in place or is pending. But like I've said, apologies, I was a bit of a write off. Yeah, yesterday. If I'd have shown you my whoop from yesterday, it was, yeah, it wasn't very good. So I just took a whole afternoon to chill out, and yeah, I went to bed nice and early. Yeah, so this is the kind of trend we're in at the moment. Why does it make it tricky? All right. Why does it make it tricky? Because is there enough optimism to push us above here? All right. We've tried once, tried twice. They're trying hard here. Yesterday we hit this level one, two, three, four times, on the 2 hour. Open market obviously gapped open to the downside. Now we're kind of consolidating here. Price is very, very slow. As you can see, we're kind of trapped in this, level. Whereas obviously the last couple of days, it's been a nice, obviously healthy push. So that's the only interesting thing to kind of note on the dollar, still using the traffic light system that we've got. And this is the interesting one as well. So yields haven't recovered as much as dollar has. All right. So yields haven't recovered as much as the dollar has. All right. Now, this could mean one of two things, right? Either dollar is going to catch up with yields and we'll be finishing the week trading around 99, or yields are going to catch up with dollar. That's going to give dollar a new tailwind, and obviously we could be finishing the week about 100, especially if we have good employment data for non-farm payroll. So these are obviously all the things that we need to, we need to focus on. I think for a big dollar move, yields have got to catch up. All right, yields for anyone who doesn't know, add them into your arsenal. All right, so yields is the big money confidence flowing into the dollar because obviously they're buying government bonds. But obviously, we created this traffic light. I haven't got green because we're no way near it. But obviously, red yields are always a bit overextended. Now, one thing, dollar has moved a lot off of not a lot, So what we've got to really kind of identify is has everything already been priced in? All right. And if it has been priced in, which I do think that there's potential, then, we're obviously not going to see that extension, but we're also not ready to, sell here. One thing that I was, really thinking about on the plane home yesterday was, and obviously maybe one thing that might be good to kind of practice, all right, is if you were running a hedge fund, all right, and you've got, 10 billion to play with or 2 billion to play with, all right, would you enter the trade that you're going to enter? Would you be that confident? All right, and that's the question that we've got to ask ourselves right now. What would hedge funds be doing here? Right? Would there be confidence that dollar could push higher after it's rejected, basically three times heavy. Yes, there is a high probability. We're going to test this one more time before we get this tail off down here, if that happens. All right. But would they be trying to sell? And I know that that is the classic retail kind of, move here is, oh my God, dollars here. It's tried once, it's tried twice. Right. You know what? I'm going to sell it. All right. That's not something that I would look at. Yes, for example, if dollar maybe potentially during London broke through here, we come up and retest. Yes, there's a higher probability 99 is going to get hit. But right now, that's all we're calling here. What's the highest probability? Is 99 500 going to get hit, or is 99 going to get hit? Right? I would say right now, highest probability is 99 500 is going to get hit. More than 99. There's not enough change. There's not enough outlook change. Remember, we're trading overall. If you're looking at the bigger picture as opposed to the smaller picture, we are trading confidence. All right. So is there, which there is, confidence in the US dollar at the moment? Is there a real lack of confidence in the US dollar, suddenly? No. All right. The only thing we could get is some profit taking, but I don't think anything's moved crazily. Now, one thing that I do like is where the yields are. All right. Dollar, yes, I'd probably put that on there's a higher probability 99 500 is going to get hit, but obviously, you know, there's also potential that probably by the end of this week we could be back down here. All right, that's obviously one thing to kind of look at. Then we've got yields here, just been ranging, right? Ranging here. Is there a high probability that we could see these move potentially back up to this area? Yes. Right. Is there a higher probability that we could move, down into this area here? All right. And this is what we've got to really ask our, selves here. Is there a real lack of dollar interest right now? No, no, because dollar is obviously pumping high. If yields were following the price of the dollar, they would be trading up here. All right. That's how much the dollar has moved. So I like where yields are from a trading point of view to potentially move up to the upside. I don't like where dollar is. I feel like we need something to change for it to either move higher or for it to move, lower. So we need overall confidence to be boosted or reduced. And obviously, right now, especially even during London, that's not going to happen. All right. Let's just have a quick glance at oil. All right. Oil, has been pumping, nicely. All right. And obviously, I do think this is one of the reasons why, dollar has been pumping again because, obviously oil is priced in dollars. Japan buys it in the dollars. Everyone buys it in US dollars. So naturally, the higher the price of oil, the higher the price of the dollar. However, today, because yields aren't pumping, that confidence is, could be kind of, short-lived. All right, because yes, as soon as oil starts to drop back down into this amber range here, what's that going to do? Instantly drag this down. All right, so we've got to be keeping an eye on at the moment three charts and then build a picture. All right, is dollar strong? Yes. All right, it is oil strong? Yes. Right, it is yields, strong. Well, if we look at yields in regards to where it was when market opened, so market opened here. All right. Yes, you could say if this is the equilibrium, all right, then yes, price is above. So for that, I'd give it three ticks. Oh, I don't know why I did that. For that, I'd give it three ticks. So all I'm looking for is to buy the US dollar. All right, until our overall outlook changes, until the macro outlook changes, and that's why we've identified here, what we need to be looking at here. So we know we've got non-farm payroll tomorrow, but we've also got jobless claims a bit later on. That's not going to make a huge, shift, especially if it comes out around break even. But obviously, it's gonna help. It's gonna give it a little bit of a tailwind. Now, do we just go straight in and buy stuff? No. All right. That's why our placement is where it is. We've already had, I've identified here. Yes, I'm 64 pounds up, but obviously it's been a tricky week this week. So I am. I allow for dollar to potentially come down. Let me just clear these off. To potentially come down a little bit more because I want it to trigger. All right. So, if the dollar was to come down into, say, this area here, all right, that should drive GBP USD up, right? But we know our overall confidence is to the downside, yeah? Right? I haven't chosen to trade Aussie. I've stayed away from it just because we've had a big move here. Yeah. It's quite a big, overall move here. So I do think potentially this would have to move up. Potentially my trigger would be here. Yeah. All right. Before we move to the downside, if that's gonna happen. Now, markets today and tomorrow should be tricky. Tomorrow afternoon is gonna have a lot of liquidity just because of where the dollar is. All right. But you can kind of tell what I'm doing here. So by identifying yields, dollar, and oil, we can identify which way we're going to take Aussie, pound, euro, USD, JPY, gold. All right. So I would personally be looking at Aussie round here. All right. Do I think that's going to hit during London? No. So there's no point. The only aggressive approach I'd have to have would be here. Am I confident that the dollar's going to move to the downside? Or sorry, the dollar's going to strengthen. All right. I am not as confident as I would like to be. So naturally, I'm not going to be taking trades from here. I'm going to be waiting for price to come into this area. to continue to the downside. All right. Pound, happy with. There's a lot of liquidity here. I like the idea. I just was, I'd rather play it a little bit, safer this morning. And hope for obviously a trigger. Euro, similar. All right. It needed to pop up, potentially come into this area before moving to the downside. Gold was my, next one. We come very, very close here. Was hoping for this to continue up and then obviously pump to the downside. And then USDJPY. One thing I don't like about this is how much it's pumped. And also, we've already had, this is a classic for those of you who have got my course. This is Tokyo Drift right here. All right, Tokyo Drift right here. Crazy move early on, and then yeah, nothing happens after. So USDJPY has still got quite a lot of heavy, selling downward pressure, especially like I mentioned, this 160 area. Everyone needs to be aware of. All right, this is the high kind of selling area. All right. This is intervention territory here. Japan obviously have to intervene because they're big importers, and extremely big importers of energy. They obviously want to keep the exchange rate between yen and the US not too high. Once it gets to 160, everything they're importing, they're buying becomes more expensive. Yeah. So obviously they're one of the only currencies that control it. So they will start buying their own currency just to drive it down. And that's what things like this are here. All right. Um, Apart from that, that's pretty much it. Does anyone have any questions? Let's have a look. Right. Alex, the consolidation between 99 and 1999 500 is horrible. Yeah, it's not. I don't like where Dana is. I feel like the move might have potentially already happened, and obviously that's why I'm gonna reinstate this too is, when you're taking any trade, imagine and I know sometimes it's a hard but realization on certain things is good sometimes, in all kind of aspects of life. But imagine every trade you've got two billion. All right, would you take that trade that you're about to take? If you got 2 billion and goals just hit stop loss and you're going to jump straight back in, would you still take that trade? Probably not. You're going to spend a lot of time because it's a lot of money, and then you got to think that 2 billion's not your money. It's you know, it's probably a hundred thousand people's money. All right. So then you've got to then think, right, would I still take this trade? Probably not. I'd probably wait a little bit longer, and treat that as you do every single trade. When you reference profit taking, like we had on gold last week, is it because the pros can see the orders held? If that the case, we can. So remember, right? No one trades, and I promise you, no one in the institutional space trades technically. That's one thing that I've learned over the years of speaking with everyone. No one trades technically. It's only the retail market that will trade technically. All that they are thinking about is everyone else's personality. What is everyone else? What's the overall market gonna do? All right. Are they going to take profit here? If so, they should just get out early. But they need to be careful because obviously, as soon as one of these guys uh, takes out, it does make a bit of a ripple in the market, and you obviously need to be a bit careful. So yeah, they no one trades technically. That's the crazy thing about the FX, space, or the kind of, social media FX, I'd call it, where it's all about ICT or it's all about head and shoulders, or, no one trades technically. They all trade fundamentally because they are experts on, how the effects that obviously news might have, and obviously, how the kind of personality. I actually had a meeting, probably it was the last meeting I had, I think it was about 3 months ago, and it was with a behavioral specialist. So like a market behavioral specialist. So she obviously worked at a hedge fund. Her job was purely to analyze behavior of traders. And obviously that's her full-time job. She's worth a lot of money. And obviously every hedge fund has one. What do you think the market's going to do right now? You know, why? And it's crazy. In comparison to previous weeks, this week is slow price action, isn't it? Yes, we've obviously had we've had kind of slow crazy. It's been doing something like this where it was very very slow, and then it went whoop, and then it's very very slow. Boop, that's how I see this week happening. But tomorrow I can guarantee will not be slow. Um, when the Iran, little bit like her, yeah, yeah. She's more analyzing the minds of obviously individual traders. The woman in the billions, I've forgotten what her name is, but I think but obviously, yeah, what this person did, Wendy, that's it. What this person did was she basically from their data from traders, and that's retail, collective data, that was her job was to analyze, what the probabilities, markets could do. So yeah. Um, so Alex, by the way, are you Arsenal London fan? Yes, I am. It was uh, rubbish final, but yeah, and then we don't need to speak about it anymore. Right. So yeah, that's about it. If you got any more questions, fire them over. Happy to answer anything, but hopefully you guys obviously, starting to understand. So yeah, Ty, welcome one of the new members, so yeah, this is obviously what a normal morning would, look like. So like I'd said, appreciate everyone's patience while I was away. But obviously, yeah, I'm back and ready to go. So yeah, I hope you guys are too. So yeah, right. Have a great day, everyone. It's a bit overcast here, and yeah, I will keep you guys updated. So have a good one.